The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Ben Boulos. These are your headlines. Futures pointing to cautious gains across Europe and the US ahead of a crucial non-farm payrolls print as White House officials look to tame expectations.
Heineken announcing thousands of job cuts and lowering its growth target for this year amid weak beer demand. We're going to speak to the CEO, Dolf van den Brink, in a few moments' time.
Commerzbank beats on the top and bottom line in the fourth quarter while flagging that 2026 net profit will likely top targets. CEO Bettina Orlopp tells CNBC the bank has a positive relationship with Unicredit.
There's no proposal on the table, and we will definitely, and we always said that if there's a proposal on the table, we would look at it, we would evaluate in the interest of all our stakeholders, and then we would make a recommendation.
Shares in US financial stocks slump after tech platform Altruist unveils a new AI-powered tax planning tool. Anthropic's chief commercial officer tells CNBC his focus is on the real value firms can extract from AI.
What I absolutely see is people innovating way more quickly on top of them than ever before and extending them in like personalized, customized ways than ever before.
Right, in the oil markets, as you all know by now, good morning to you all, there are two things you can do. One is look at the macro and think, well, what's OPEC up to? What's the president doing? What's Iran doing? The other thing is you can actually have your self-help, and that's what Total Energies is looking at today, because quite frankly, you can't do much about the fact that the oil price is low by historic standards for a lot of the oil majors, and Total is another one of these oil majors in Europe and globally that is struggling with the lower price. And yet, yesterday we saw that BP is taking action to repair its balance sheet by suspending its buyback program. Good news for some of you out there, if you're Total shareholders, that they have confirmed the guidance of their buyback for 2026. Now, that's no mean feat, because if one of them, the dominoes starts to fall on the buyback, then there was questions about the rest of them, albeit with BP's balance sheet a little bit more fragile perhaps compared with Total's. Anyway, the guidance for the buyback is for between 3 and 6 billion. That's quite widespread, Monsieur Pouyanné, that's dollars. 3 and 6 billion for a crude price between $60 and $70 a barrel. So caterus paribus as well. In oil and gas business, the fourth quarter production was 2.545 million barrels a day equivalent. The dividend has been proposed at €3.40. The yield on the divvy last time round, incidentally, was 5.4%. So a hearty dividend there. In 2026, they expect to generate cash flow above $26 billion US dollars. So a 13% drop in fourth quarter profit on lower oil and gas prices, but a lot of self-help going on here, including increasing overall energy production by 5% overall on the year. The first quarter 2026 buyback will be $750 million. Quick word on the shares for you as well, which you can see on the screen there. As you can see, over a 5-year period, they have rallied hard. But if you look at a much shorter term period, they have found it very difficult to move higher, apart from that little blip that you can see on the right-hand side. But apart from that, it was stuck in a bit of a holding pattern for most of the last 6 months.
Yeah, just looking at one of the recent stories they had out where they're doing a contract with Google to power their data centers in Texas. And this is a solar deal as well. I never think of the company necessarily being solar. But I know you obviously much closer to it.
Funnily enough, I was down in one of the suburbs of Paris about, it must have been 10 years ago with Pouyanné and the whole Energy Total team, looking at what they do have and what they don't have as well. But yeah, absolutely, a big presence in solar. Yeah,
fascinating. Let's push on to what we're seeing on markets. European futures as we gear up for the trading session this morning. A little bit patchy, as you can see. We're expecting the UK stock market to improve. Yesterday, we were on the back foot on most of these indices, and the exception was the French market that was slightly ahead. This morning, we're not seeing a signal there just yet, but I've got to say, mostly negative across the board is what we witnessed. When it comes to the US markets as well, we had a patchy old picture. We saw the Dow reaching for fresh records, but again, a reversal around technology on the S&P 500 and the Nasdaq. Alphabet, the big moving stock to the downside. Don't forget, we had the news around $20 billion in bonds across several tranches being offered to the markets to pay for that massive $185 billion capex spend. What we're seeing on those futures, though, suggesting markets will push higher, Ben.
Now, we are looking ahead to today's non-farm payrolls print. Dow Jones economists expect the number for January to come in at 55,000, but there's a huge spread on the street. Goldman is eyeing gains of 45,000, while Citi thinks the figure will come in as high as 135,000. The data comes after Challenger, Gray and Christmas reported that layoffs spiked and hires plunged, both seeing their worst January since the global financial crisis. White House officials have laid the groundwork for a soft print, with trade advisor Peter Navarro saying we have to revise our expectations down for what a monthly job figure should look like, since the Trump administration is, quote, deporting millions of illegals. National Economic Council Director Kevin Hassett told CNBC a lower print than investors are used to shouldn't provoke panic, arguing that the adoption of AI and deportations could weigh on the headline figure.
So Heineken is trimming its growth expectations for the fiscal year and embarking on a cost-cutting strategy that will see up to 6,000 jobs cut over the next 2 years, as the Dutch brewer contends with flagging sales in its traditional beer business. The group now forecasts profits to grow between 2 and 6% this year, against guidance of 4 to 8%. It's always been a pleasure, and always will be a pleasure, speaking to Dolf van den Brink, the CEO of Heineken. And Dolf, we've shared your journey as well, but it's a tough journey, and of course you will be stepping aside later on this spring as well. Just tell us about the latest announcement, and we'll talk about you personally in a few moments' time.
Fantastic. Hey, good morning, Steve. Good to be with you. We believe we had a well-balanced performance over last year, which was indeed still under challenging market circumstances. We grew our revenue, we grew our operating profit by 4.4% organically, 2.6 billion in free operating cash flow, 40 basis points of margin expansion, and very importantly, in 60% of our markets, we gained or held market share, and 80% in our priority markets. So in the aggregate, a decent set of results, setting us up for a good 2026.
Dolf, you know I'm lost to the brewing business, but I do like a zero occasionally, whether it be one of yours or one of the rivals as well. I don't want to get myself in trouble with any of the rivals. But the fact of the matter is, it's been a success, but perhaps not growing quite as quickly as you would hope. How is the offsetting strategy for the fact that people like myself are just not tippling as much as they used to?
No, we remain very confident in our 0-0 and low and no strategy. We were the first mover about a decade ago. Heineken 0-0 remains by far the largest 0-0 brand on the planet. Last year was impacted by Brazil, which is our largest Heineken 0-0 market, where we had to do a stock adjustment. But for example, the critical US market, which is one of the largest markets now, we locked in the 7th year of consecutive growth for Heineken 0-0. This year we are launching flavors. We're bringing an ultimate version of Heineken 0-0. So we remain very confident, and we believe there will be significant growth ahead for the 0-0 segment, and in particular Heineken 0-0.
It's Karen jumping in. Let me ask you about the job cuts today, because the number seems gigantic. 6,000, up to 6,000 job reductions. I was looking back over recent news flow that you had around other job cuts, much more in the hundreds mark. Why such a large level of reductions today?
Yes, productivity has been a top priority in our Evergreen strategy. And as we reiterated at our capital market event last October, we want to further step up productivity. We committed to 400 to 500 million euros of savings on an annual basis. And this is a first operationalization of that commitment. It's a combination of earlier announcements like the reduction in our global head office to a more lean and mean strategic head office, ongoing brewery closures across the network, but particularly in Europe, moving people to business services, as well as more local for local productivity savings. So indeed, that adds up to around 5,000 to 6,000 jobs over the next 2 years. And again, we believe this is very important to both deliver against the profit expectations, but also to be able to invest in growth in our premium brands, in our 0-0 propositions, as well as digitizing the business.
Off to the point, the multi-layer reorganization that you're talking about doesn't sound like it's AI driven, that you're not extracting because you're simply automating. Is that the right assumption?
It's partly also due to AI, or let's say digitization. We were relatively late to scale our business services organization. That's a very big part of our Evergreen 2030 strategy, with around 3,000 roles moving to our business services, where technology, digitization in general, and AI specifically, will be an important part of ongoing productivity savings.
Dolf, it's Ben here. Good to talk to you. Steve mentioned that you'll be leaving the company soon. I just wonder, as you hand over the reins, is there something that perhaps, if you were there a little longer, you would have been keen to get done? Something that's sort of just, I don't know, niggling, that you think, oh, I wish I'd done that during my tenure?
It has been an eventful 6 years. Surely, when I stepped in the role in June 2020, I had no idea how turbulent the world would be, our industry. I'm incredibly proud of what we, all 87,000 people at Heineken, have achieved over those years. We made a lot of progress. I'm sure there's a couple of things that we didn't get immediately right. The Evergreen 2030 strategy, as we presented it in October in Seville, is the best expression of the things that we feel we need to do and need to do better. And as such, I'm very confident and optimistic about the future potential for our beautiful company.
And then looking more broadly at the sector, what do you feel the European food and drink sector needs in order to be able to compete competitively, going round in circles, compete effectively and thrive? What would you like to see in terms of the groundwork that policymakers could lay for that sector?
Well, talking about the sector, I think, and we believe, it's a tale with two stories. We believe our emerging market footprint, the growth algorithm, works very well. The growing demographics, urbanization, growing GDP translating to increased beer consumption. That's what we see in Latin America, in our African footprint, which was very important last year. That's what we're seeing in our Asian footprint, with key markets like Vietnam and India continuously doing very well, as opposed to the more developed markets of Europe and North America, where the category has been more under pressure. And that's where we need much bolder innovation. And it would surely help if the overall business climate, the pressure on business, we are selling to literally hundreds of thousands, if not millions, of on-trade customers, bars and restaurants, were really hurting with a lot of kind of cost pressure, tax pressure. And we do hope, indeed, that the policies, in particular in Europe, will become a bit more favorable to help our customers thrive now and in the future.
Dolf, we've always had such frank conversations, you and I, so I'm going to ask you a very frank question. I don't know where you're going. You've been there 28 years. I don't see what a successor can do, what Peter can get from a CEO when he finally chooses one, who can do something different. The strategy, it's there. It's a very difficult market. You've explained it very well to me and Karen over the years as well, and now to Ben as well. Why are you leaving?
For me, it is after 28 years at this beautiful company, 6 years which have been eventful, as you were saying. I felt with delivering and closing Evergreen 25, launching Evergreen 2030 late last year, that this was a logical moment for a business transition, bringing in fresh and energetic energy into the company and allowing me a personal and business reset. I'm not gone yet. I love this company. I will remain, as passionate as ever to make sure I leave this company in the strongest possible place by the time I end in the end of May. And for sure, I will miss our conversations, Steve, Karen, Ben, and the rest of the team. For now, you never know what happens in the future.
We'll stay in touch. I've got a side hustle which I'd like to get you involved in as well. So let's get our teams to chat. Dolf, really nice to see you. And again, always a pleasure speaking to you. And I always love our conversations. I know Karen and Ben do as well. Dolf van den Brink, who is the CEO of Heineken. Ben.
Coming up on the show, cryptocurrencies continue their volatile swings. Bitcoin now hovering just below $70,000. We'll have more with the co-CEO of Binance, Richard Teng, after the break. Plus, an AI-fueled sell-off continues stateside, but Anthoropic looks to capitalise on the fallout from its latest enterprise AI tool, naming a fresh partnership with Man Group. More later this hour. And our earnings coverage continues here on CNBC. We'll be speaking to the CEO of SGS. That's coming up at 7:30 London time.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts.
Let's take a deep dive into crypto and a quick look at the price action this morning. 66,674 is where we're sitting. We have bounced off the lows. The level 66,371 was where we're trading in the last 24 hours. And don't forget, that was the lowest point since October 2024. So we've lifted slightly since that. You can see still down morning session.
It hit 60,000 last week.
And just in the... Oh, right, yes. That was one of our stats.
I don't know who wrote that. It was 60,000 last week.
Thanks to the team for the overnight
Yeah, well,
stats.
thanks, team, for that, for Karen. She's very grateful.
But there has been talk that the ETF, Bitcoin ETF, has put in 145 million earlier this week, so whether that's supportive of the price. Let's get to CNBC's Elaine Yu, who's been speaking to industry leaders at Consensus Hong Kong about the recent volatility in crypto and what it means for markets in the future.
What we're seeing is customers continue to come into the market, traditional financial players, huge name commercial banks, investment banks, asset managers, they're coming to bullish to be able to build businesses on chain, and they're looking forward to the future, not to this current malaise, this current volatility, and they're seeing this potential for the tokenization or the coming on chain of major global financial asset classes like equities and fixed income.
For a lot of our users, they are seeing it as an opportunity. We see a lot of people buying the dip, like you're saying, and we also see them diversifying their portfolio, not just into the one or two big assets, but actually looking at the long tail of assets. And the other interesting part is that with Robinhood, since we have multiple asset class on the platform, we've seen people actually cross-selling between different type of products. So they're also buying equities, they're also buying options, prediction markets, and more.
We've experienced several four-year cycles since Bitcoin has launched, and this is no different than any other. The peak was in October when Bitcoin hit $126,000, and I expect Bitcoin to go all the way down to the $50,000 to $60,000 range this summer before things turn around in the fall.
Well, let's get out to Elaine. She joins us with another special guest. Elaine, good morning to you.
Good morning, Karen. So Consensus has kicked off and it's in full swing now. And joining me is Richard Tang, the CEO of Binance. Thanks for joining us today.
Thanks for having me.
So today you're announcing a new project with Franklin Templeton, a new institutional collateral program where eligible customers trading on Binance can use tokenized money market fund shares issued through Franklin Templeton as collateral off the exchange. That was a long sentence, but basically this allows people to earn yields from tokenized money market fund assets without parking those assets on the exchange. So tell us more about this. What is it enabling and solving for investors?
So first, we're very excited to announce that we are deepening our ties with financial institutional giants such as Franklin Templeton. So this is the first of many. So what we have introduced is to allow clients to hold Benji-issued money market funds, right? And these are tokens, generate yields on a 24/7 basis on that front. It allows for trading on the exchange with the deepest liquidity pool, right? The largest marketplace in the world on Binance. And all the collateral are held off exchange with a partner, SEFU, right? So it allows the best of all worlds, and it's a very institutional offering. It's based on what some of the institutions want, where they hold the assets off the exchange, but trade using our liquidity, right? So we look forward to support all these new initiatives and deepening our collaboration between Web 2 and Web 3.
So new new ways to earn yields while controlling risks as well. And I want to talk about the volatility this year as well. I've been talking about that with all the industry leaders as well today at Consensus. So with this crash earlier, how are users on Binance trading all this volatility?
Well, naturally people will be concerned given the market volatility and movement, but several data points are important, right? So I just came back from Davos, meeting with the financial institutions, corporate leaders. So if you look at the momentum, the resilience, and the support for crypto and blockchain industry is very real. There's huge support. And if you look at different data points, right? So if you look at institutional holding, roughly 1.3 million Bitcoins holding, and that remains very stable. So the institutions are deploying. In January alone, we saw another 43,000 added by the institutional pool globally on that front. So there's faith on that front, and actually, a lot of them are looking at, this situation and buying for the future and deploying for the future. So I think that's one data point. If you look at all the strong use cases, utility, stablecoin usage, tripled last year. If you look at market cap, it went up 50%. Crypto payments, another big use case, and of course, real-world asset tokenization that is going from strength to strength. So in all the different engagement that we have now with financial institutions around the world, every one of them are looking at how to help tokenize the assets, put it on-chain, so that to allow for 24/7 trading and to benefit their users, right? So New York Stock Exchange have announced an initiative to allow for 24/5 trading of all their equities product. So have NASDAQ. So we are looking at how do we support a lot more products to be traded on-chain on that front. So the momentum is good, is strong. And a lot of times it's not only useful to look at present and current. If you take a 3 months time frame, that's very short-term focus. If you take a longer time frame, right? So compared to 4 years back, crypto, Bitcoin has probably increased multiple folds on that front, right? So if we look at all these data points, we are ripe for very strong momentum into the future.
Yeah, and I want to ask about the leadership changes, the shakeup at Binance as well. Of course, you have a co-CEO now as the exchange grows into different markets. She is now the co-CEO, and she's the co-founder herself, Yihe, and she also has children with ZZ as well. So with this new structure, how do you two split responsibilities?
Well, so if you look at it, we are increasingly very global. It's a different sort of organization when I first took over as CEO. So if you look at beginning of 2024, we started with 170 million users. By end of last year, we have 300 million users. So we added 130 million users. We have a global license now. We are regulated by Abu Dhabi Global Market. We are deployed in so many other places around the world. So as we increase our deployment globally and we become a multifaceted organization, it's very important that we become ambidextrous. And Yi is a very inspirational female leader that people in crypto knows for a long period of time, co-founder of Binance, very well known in the industry. And she's well known for her user-focused approach to helping users to come up with products that meet user needs, right? So we have complementary strength, and we work together very closely even before her appointment as co-CEO. And the leadership is really looking forward to embracing the next billion users onto Binance. We reached 300 million now, financial super app. So we're introducing a lot more product classes and product suite. We have started trading precious metals on perpetuals, and the volume has grown very, very well in the last few years where we first traded it. So we're looking to introduce a lot more product class, and we are doing a lot more global deployment. So, we are working very closely together as a team.
So she perhaps more on the user front, you said?
User, product front. I look at, product deployment, I look at all the licenses that we have, and global deployment.
And last time we chatted too, we talked a bit about ZZ, and because he's still the majority shareholder of Binance as well, and he's now more back in the fold too. So how involved is he in Binance's strategy or direction?
Well, ZZ is a giant in the industry, right? So if you look at what he has built in terms of Binance and how he has contributed to the crypto industry, it's just massive, right? He has outside influence, right? So of course, obviously, as with any company, the controlling shareholder will have say over major corporate decisions, and that's how the company is being structured. On a day-to-day basis, the management team, myself included, the rest of the senior leaders, we work very closely with the board of directors. So we have 7 members, 3 independent directors, including the independent chairman. to map out our strategy, our future deployment for the future, our product offerings. So we could continue to deploy, working now very closely with not only the Web3 space, but all the financial institutions. We just introduced and announced Franklin Templeton. At any point in time, we have so many institutions engaging us on different product offerings they want to do, and being the leader in the Web3 space, we can really support them. And many countries are also talking to us, right, on how to support them, not only in terms of crypto regulation formulation, but also helping them to tokenize assets globally, unlock value for those countries, right? So we have so many different engagements. So we have plenty to do, and CZ is always a driving force behind the entire industry growth on that front. Yes, yeah.
And I want to touch on also, there has been more media reports lately in recent days, including from the New York Times, about the ties that President Trump's company, World Liberty Financial, has with Binance and how it has grown perhaps with USD1, their stablecoin, being on Binance, majority sitting in Binance. And I understand that Binance has said, of course, large exchanges hold various tokens, they promote various tokens, but I was wondering if you think Binance should do more to avoid at least the appearance and suggestions about the conflict of interest, given all the scrutiny from ethic experts.
Yeah, so if you look at it, all this mischaracterization is most unfortunate, right? I mean, people read just the sexy story, but it's not the full story, it's not the data, right? So if you look at, even in terms of USD1, right? So you have so many mischaracterized reporting. But USD1 itself, if you look at what has happened, MGX, when they invested in Binance as a strategic investor, they were the ones that decided to use USD1 as a stable coin in terms of payment consideration, and we accepted that, right? And the fact is, USD1 was listed on other exchanges first, even before Binance listed it, right? And you mentioned it, we are the largest crypto exchanges. Our volume is 5 times that bigger than the second largest one in the industry, right? So any projects that wants to gain traction will have conversation with us, and we'll try to support them. We have supported more than 15 stablecoin trading pairs on the exchange now, right? And we run different promotions. Recently, we run a promotion on Ripple USD stablecoin, right? So we do all those things.
Do a little more though.
So if you look at just the stablecoin space, Binance as a centralized exchange, we hold more than 50% of stablecoins among the centralized exchange, right? So the figure that you mentioned is not, unusually high, because we are just that volume at that size, right? And people just have to take all those reports with a pinch of salt on that front, because it doesn't say the full story, and there are so many mischaracterizations happening.
And that's all the time we have today. That was Richard Tang, the CEO of Binance, and it's back to you now.
Very interesting interview. Thank you very much indeed for that. Okay, let's take a look at European equity futures. A lot of corporates reporting. The net is that we are pretty flat at the start of trading, but some amazing individual companies reporting. We'll come to those as we build up to the open here in Europe.